Hey everyone, my name is Brian Howard. I'm a Calgary Realtor who has sold an average of a house a week since moving to this great city in 2003, and this is Calgary Living, Real Estate and Lifestyle. I'm interviewing Calgary's top performers as it relates to living and lifestyle in our great city. Some of the podcasts will be real estate decisions specific, but most will be about life in Calgary and why we choose to live here, or at least why you should visit. Thanks for tuning in.
Well, folks, welcome to another edition of Living in Calgary. I'm your host, Brian Howard, and today I have my old friend, my old colleague, fellow real estate investor from way back in the day of REIN, the Real Estate Investment Network of Alberta, I think it was originally called, then became of Canada, Bill Beko. Bill, welcome to the show.
Well, thanks, Brian. I'm pretty excited to be here. So I think we're going to have some fun today.
We are going to have some fun. Bill, you reached out to me most recently because you were kind enough to listen to one of my recent podcasts with my old coach, Steve Powers, a real estate coach. And we're just kind of like really wanting to catch up. And I really, really appreciate that catch up because you and I have been through the ringer, or through a lot since we started investing in Calgary. I think investing in real estate in Calgary, I think you started investing kind of vigorously in 2003, and I started investing vigorously in January of 2004. Is that the truth?
Well, it's pretty darn close. Yeah, it was summer of 2003. We started going crazy and bought a ton of property in the next 4 or 5 years, and we did go through the ringer. I mean, we saw the boom and we were fortunate enough, we survived through the downturn, but I think a lot of it was luck. I know a lot of other investors, when we had that first downturn, just took a major bath and got completely out of real estate. Now, having said that, we didn't escape unscathed. I mean, we sold off a bunch of properties to survive. We had joint venture partners to pay out, but we came through, and the saving grace was we had a ton of cash flow on a bunch of our properties. And as we discussed in our catch-up meeting, I ran a bunch of rooming houses, so weekly furnished rentals, which were high cash flow, but it was also high turnover. And that just created a lot of, let's call it burnout. I've had over 1,500 tenants since I've started, and I'm very thankful for my tenants, but it got to the point where I'm just not as excited to be a real estate investor the last 5 or 6 years. It's just kind of taken me over the edge. So
it's funny, Bill, that in a nutshell, kind of that's it. And here you and I are back in, like, we're recording this in early March 2022, and the investor hotness, uppityness, and confidence is like through the roof again, where like people are, writing offers with no conditions and paying, lots of money over list price. And we've seen this market before, you and I both, for the first time, probably in 2006-07, and then maybe again a little bit in 2013-14. And now we're back at it. So we want this podcast to be fun for the listeners. We don't want to be too skeptic, but maybe, some of our listeners will maybe take a piece out of this, and I don't give pause, but I guess kind of some of the things I'd like to talk about a little bit is, well, your life experience here in Calgary, and what you do currently, and bring it all back to investing to real estate somehow. Bill, are you born and raised a Calgarian?
No, I was born and raised a couple hours outside of the city, over in Brooks area. So grew up there and came to Calgary in 82 initially, was here for a couple of years, going to university. University just wasn't my thing, left. Realized the small town was no longer my thing, and was back in Calgary a few years later. So I've been here in Calgary full-time. I guess it was fall of 84-ish, roughly. So
what did you do for those 15, almost 20 years before you sort of said, hey, I'm a real estate investor, and actively sought out joint venture partners and such things? What did you do those 20 years?
Holy cow, so many different stories now. So I worked up at the airport for a while. I got into video stores. I became remember those? You had to actually physically go into a store. So right. I worked with the Video Showplace, which later became Rogers Video, which is where I met my wife. And then I got into the computer industry and spent almost 17 years in the computer industry. various different levels. And then at some point, like many real estate investors, we read that silly little book, Rich Dad, Poor Dad, and the light switch went on. And we had no idea what we were going to do, but we knew we had to start making money for ourselves instead of just making money for everybody else. Mm-hmm. And we kind of soul searched for a little while, and suddenly it was like real estate is a thing. So we kind of jumped into that, and it was really good timing. Like we said, back in 2003, rules are entirely different. It was the Wild West, and we were able to jump in hard, like I mentioned. And, we bought, I think it was 6 properties in the first 5 or 6 months that we started up, and basically minimal cash, because the rules are so different between all the rules we had back then, with being able to take over mortgages and special deals with developers and such. We were able to get in pretty quick and move forward fairly quick, and picked up a lot of strategies along the way. Rain was very, very positive in that manner, because we met a bunch of people who were doing a lot of the same things we were doing. So we became creative and grew and grew. And as we grew, we realized that we couldn't do it with our money. We're running out of money. So it turned into joint venture partners and just expanded, and then rooming houses, and it just became fun. So a lot of the stuff we did as well, we started as flippers. So we were buying, renovating, and selling, usually making money, but not always. It's not like TV. You don't make money every time. You want to, but we'd make money, and first flip would support us. Second flip would typically help us buy a rental property. Third flip would possibly buy another one or support us a little better, and just kind of go that way. And then as we bought rental properties, had them running for a year, we'd be able to show investors numbers and be able to bring in, investors on a performing property. And we had all our numbers down point at that point. So it just made the whole process simpler and easier to get partners in.
Sort of, I'd like to jump back to this too. And now with all these years in sort of Alberta, and now, Calgary since '84, what strikes you most about living in Calgary?
Being a small town kid, it was nice to come up to the big city. And I mean, Buddy and I would drive up for the weekend and hang out with friends and do stuff like that before I was back up here full time. But it was exciting for us coming to the big city. Now I've been to many bigger cities since, and it just strikes a nice balance. It's a big city, but it's not overly big. It's not Toronto crazy or Los Angeles crazy. Up until the last few years, traffic wasn't so bad. You could get around. It was easy to get around everywhere. People were so friendly. And back to the rooming house business, I dealt with a lot of international agencies. I dealt with companies that brought in foreign workers from Europe and from Mexico, and churches that brought in workers, and the unions that were bringing in people. So I got to meet people from all over the country and all over, well, not just North America, but all over the planet, it felt like. And, they all just seemed to really enjoy coming to Calgary, and I enjoyed showing off Calgary. It's just a great place. So close to everything. Good stuff.
What's really easy for you these days, Bill?
Is anything easy anymore? Staying home right now. Holy cow. It's easy to stay home. And I think that's a bit of a trap, which is also a positive in some ways, because I've found in the last year and a half, it's actually opened up a lot of opportunity for me to reach out to people. I've talked to people like yourself that I had lost contact with. We get too busy with our lives. Now you're sitting at home a little bit more. You've got a little more time in theory. It's allowed me to reach out to a bunch of people and just touch base and catch up and see what's happening. And now with the takeoff of programs like Zoom, it's been phenomenal. Well, at times, I did spend an hour and a half trying to get my mother-in-law's TV to work properly via Zoom this afternoon. So there are some stresses as well.
Yes.
But
good.
That's kind of my story. I'm doing a lot of landlord consulting. I'm helping landlords and even some tenants with some of the eviction process in Alberta. Since
you became an expert in the Residential Tenancy Act. Is that what we say? Or the RTS? Is that
RTA?
RTA.
Using the RTDRS, which is a Residential Tenancy Dispute Resolution Service for tenant eviction. So again, back to the rooming houses, dealing with so many tenants, I had to know the laws in and out. And I got to the point where I was helping landlords with it. And then I evolved to creating my own website, albertaeviction.com, where I was helping landlords and tenants. My thoughts and my ideas, I'm going to help good landlords with bad tenants, and I'm going to help good tenants with bad landlords. I don't want people breaking the rules and making it more difficult for us landlords. There's enough rules in place. And if we screw around and try to skirt the rules and make it more difficult for tenants, it's just going to get worse for us. We see it in a lot of the very tenant-friendly regions where more and more restrictive rules are put in place. So more of my story, as we did that downturn in 2007, it kind of sat in our hands going, oh, it's going to end in a year. Oh, it's going to end in 2 years. Oh, it's going to end in 3 years. I built up Alberta Eviction, which kind of led me to another site as I found out how ill-educated so many landlords are, and created the educatedlandlord.com, which actually helps landlords across the planet. So I have landlords from Australia, South Africa, across North America, even into Europe, that are picking up some of my courses and some of my information, which is more generic, systems and processes. I was dealing with 70 plus tenants on a monthly basis at one point, and you had to have all kinds of systems and processes to make it work. And it's kind of amazing. I've downsized the majority of my properties, and I seem to have less time now than when I was all systemated and regimented and had all these processes. And now that I'm free flowing, it's like, where did all my time go?
Right. Interesting. Let me ask, Bill, how does your intuition system work for you? I mean, having all these rentals, these like rooming houses, and like a lot of the experiences you've had in the last 20 years, especially, I would say that you have to really rely on your intuition system, JV partners, finding a JV partner, deciding to work with them, firing a seeing that, a dog property may not be working and letting it go. After all these experiences, tell us a little bit about intuition, and maybe relate it to what's happening in today's market, as we've already referenced once in this call and earlier last week, I guess.
It's
that's a lot. Sorry.
Yeah. Well, intuition really comes into dealing with a lot of the tenants, and because I was dealing with so many people, and with rooming houses, you're not doing credit checks on everybody, so you've got to get gut feels fairly quick, and you've got to react really quick. So a lot of it comes down to my initial questions that I ask people and the feeling I get back. Same with joint venture partners. When you're talking to people, you can tell if they're interested or not. And then you just have to see if they're going to be a good fit for you and you're going to be a good fit for them, which takes me to some of the less fun stories. We had one property, and again, back in the good old days when it was so easy to get mortgages, we had a mortgage, a 3-year term on a property, and then prices dropped on the property, and then the lender didn't want to renew.
I've been there.
Yeah. And we had a joint venture on the property. We'd never missed a payment. Cash flow was great out of the property. It was a rooming house. And now suddenly we had to either sell it or we had to get new financing, which meant we had to come up with like another $60,000. And it's like, the numbers just didn't work. The economy still wasn't cooking. We were kind of on the downside. Was it going to be 5, 10, 15 years before it turned into something where we'd get the money back? So we decided to sell it. So immediately the market got worse. Seems to be my motto. If I need to sell something, the market just takes another downturn. And we eventually sold it, but we ended up having a joint venture partner that lost some money. And we then, because we dragged him, and I'm going to use the word drag, we dragged him into this venture, and we expected it to do well. We spent the next 3.5, 4 years making monthly payments to get him back to what he originally put in. So that came out of our pocket, but that's just how we felt things should be done. And we hoped we didn't have any more properties like that. So
did I hear you right? You ended up selling it because you had to, because they wouldn't refinance it. And then you actually paid him back his principal investment over 3 or 4 years by monthly payment?
We paid the majority of it back. So we took a much bigger loss and he took a smaller loss. So
as you think back to that, so sitting here in my perspective, that wasn't right. It wasn't fair. It was an investment that he made. You weren't guaranteeing increases. Do you think that you should have paid him back what was lost? Or I guess you were the real estate expert and you decided on this 3-year mortgage that came due. So, maybe you do take the, making personal payments to him over 4 years monthly, that hurts.
Well, it did. But he was struggling worse than us. So, it just made...
You made that decision, yeah.
Yeah. Would I do it every time if I had the funds to do it? Yeah, probably.
Absolutely,
I don't want to screw people over. They came in, again, I'm the expert. I'm supposed to make things worse. Or I'm not supposed to make things worse. I'm supposed to make things better when things go worse. you know, typically we'll have a plan B and a plan C, but when plan C and C and D and E aren't working and you have to go to F,
right,
and ditch the
you had
property.
already turned it into a rooming house to increase cash flow. Cash flow was excellent, even though I'm just guessing. I'm just going to throw out these numbers. You bought this at the peak of the market for, let's just say, 350. It was 2010 or 11. It was now worth 265, and you had turned it into a rooming house, and we're probably making $2,500 a month on it. But the bank wanted their money back, and you probably financed it when you bought it for 350-ish, for like, or actually you probably paid 380, I bet.
But it was actually even less.
You financed it at 5%, 5% down or 10% down. So the mortgage was like 330 when it was worth, you know, assuming you paid 350, the mortgage was 330, and now it's worth 265 in 2009 or 10, right? It was something like that.
Wasn't quite that bad, but same kind of idea. I mean, we bought it for about 315. It dropped down to about 300. We had 5% financing on it, so it was right around 300,000 financing. And then we sold it for 285-ish and had to pay commissions and all kinds of other stuff on it, and then additional legal fees so it was a good time.
Yeah. So I know those numbers only because of similar experience. I was buying at the time, well, in 2004 early in Altador, buying 50-foot lots, single family homes, bungalows for up to 300,000. And then that changed quickly and jumped to 450. So then I started buying in Forest Lawn. And I was buying in Forest Lawn, these similar type houses that I was buying in Southwest and Altador for $330,000 in 2007. That dropped. Oh, and I would get like financing on it with JV partners, and the mortgage would be 300 or something. And the dropped to probably 250, maybe 275. And then the bank wanted all their money back.
Weird how they're like that.
Who would have thought?
Yeah, exactly.
Bill, what is it that you love most about Calgary?
You know, it's kind of changing. I used to love how friendly everybody was. And I found that as we've gotten so much bigger in the last, 5 to 10 years, that is distancing a little bit more. You know, when I moved into the neighborhood I'm in now, I ended up knowing all of my neighbors. You meet them, you chat with them, you talk with them, maybe you have a beer in the backyard together or chats out front. And there's been a lot of turnover over here since, and, I still know most of them, but it's not quite the same as it used to be. And I think it's, as we become this bigger and bigger city, you lose that hominess, that tightness that you used to have. Not that it's gone, but it just seems a little different than it used to be.
What's keeping you here right now?
Well,
where are you going next?
It's kind of home right now, but as I mentioned, the elderly parents, my wife's parents are out in Victoria. So we may end up taking a little jaunt out there for a few years and help them along. You can only do so much via Zoom. And, my wife was making frequent trips when they were having some health issues. And so she was out there for 3 weeks, and then home for a couple of weeks, and then back out there for 3 weeks. And we foresee more of that taking place in the future. So it might just be easier to hang out there for a few years.
I think Karen's an artist, your wife, I believe,
correct.
And primarily. And you, most of your work can pretty much at this time be done anywhere, can't it?
99% of the stuff I do is all online, phone calls, Zoom calls. So I'm not locked down anywhere. And I actually started transitioning to more of that years ago. Yeah. So I may have to sell some more property just to finalize everything and make it a little more streamlined. But, I could probably still manage my property, because I managed properties remotely for years just by having people with feet on the ground that could deal with a lot of the stuff I was doing.
Right.
But, back to that burnout phase. It might just be easier to start fresh out there for a while, hang out and just build more business up.
Right. How's the boom bust economy? I mean, I feel like you and I have been almost like no one else, because we're of this age where it was more like our dads were buying property in the early 80s at 18 and 20% interest rates. And then, I was in the East Coast and you were in Alberta. How bad was your family affected by the 1982 crisis here? And then just the sort of steady. And then 1996, things started to go up. You got involved in real estate investing at a really good time in 2003. boomed in 2000, late 2005, 6, 7, 8. You and I both thought we were really rich millionaires. And then it crashed in 09, 010. I learned, unlike you, going the rooming house route. And, I learned to sell real estate at a high level, meaning earning a lot of commission fast to pay back a lot of bad debt and sort of stay on top. And then 2013 and 14, the boom happened again, or somewhat of a boom. And I was able to start to feel good again. And now here we are. We went through about 5, 6, 7, really 7 years of nothing. I mean, in terms of real estate in Alberta, like prices just pretty much consistently dropped for 7 years. And now we're back up. How do you deal with the boom bust? You, your family, your friends, the people that you've seen come out of it unscathed and done really well, and then people really like you and I who've suffered a fair amount.
Well, the people who survived focused on cash flow.
Mm-hmm.
And, the big thing I caution a lot of investors is if appreciation is going to make the deal work, it's speculation. It's pure speculation. You don't know when that cycle is going to end, especially in Alberta. I mean, things are apparently slowing down a little bit now, more properties showing up in the market, oil spiking. So we'll probably see a local push where things are going to start looking better for a while. But how long will that last? Will it be a year? Will it be 2 years? So if you're getting through, and I mean, this is kind of what we were talking about back in that 2005, 2006, 2007. It's like properties never come down. They always go up. That's just what we got used to. And it was a real eye opener. And, we made money on all the properties, but I don't know if you can really count $5, $10 a month as really making money, especially if you've got maintenance or vacancy costs that you have to deal with. And those rooming houses, they were pretty massive cash flow. So as I said, that just kind of saved everything and allowed us to move forward and allowed us to make some decisions versus other individuals who had, I know people who had 15, 20 properties that they were only making $100 a month cash flow when it was good. Mm-hmm. And when it dived, they were losing money on every property every month. And they were also down $50,000 to $100,000 in equity in every property. So it was pretty scary for a lot of individuals, which led to bankruptcies and foreclosures and all kinds of less fun times. So if you're focusing on cash flow and time will correct all the mistakes you're going to make. Mm-hmm. That cash flow gets you the time, and then the time itself allows you to get your mortgages paid down. It allows the market to move up and down and just puts you in a better position.
With all your experience of like the cash flow, especially, I guess, and so right now, in order to make a property cash flow in Calgary, if you're paying, I don't know, $500,000 or more, I would say that cash flow would be very difficult on almost any property over $500,000. Yet I'm getting today calls from Vancouver and Toronto investors that are more than happy to pay $630,000 for a house, in Cranston, a single family detached home. And what's your feeling about this in terms of intuition? Is Calgary going to do what Toronto and Vancouver did and go up, I don't know, 30, 50% in the next 18 months? Any thoughts on that?
15 years ago, I would have said yes, but no, my experience is it's not gonna. I think there's no economic reason. Well, actually, now there is. Sorry, with oil going up like it has been, there's finally an economic reason for prices to be increasing in Alberta. But as you mentioned, we've got so many people coming from Vancouver and Toronto, this whole pandemic era where people don't have to work in an office anymore. They can do all their work remotely. So now we have somebody, as an example, somebody who's got an 1,100 square foot bungalow in Toronto that they've just sold for $1.3 million. And they see a 2,500 square foot house in Cranston for only $630,000. That's a steal. Yeah. They're ecstatic. And, some of the investors from Ontario are just fed up with the rules out there. It's taking them 6, 12, 18 months to get a tenant out, and they're not getting paid at the entire process. So they're kind of looking to Alberta as a safer place to invest. We're much more friendly with the landlord tenant laws. And they're so used to not making money on cash flow that, even if they're only losing $100, it seems like a fantastic deal here in Alberta. So it really does come down to perspective, but you talk to the long-term investors, and if you have that cash flow, it gives you so much more flexibility when the market does go up and down. you can move your rents up and down and you're not losing money every month.
Interesting. And Bill, what is the best way, if people wanted to reach out to you, what are some of the best ways to reach you? What's your current business? I mean, I think you're involved in utilities a little bit. You're involved in helping people with, evictions, whether it's a good landlord and a bad tenant, or a good tenant and a bad landlord. What are some of your other, you got a few, your wife, Karen, is doing online art lessons, I believe.
Yeah. So, you can find my stuff at, albertaeviction.com. I can be reached through there, or theeducatedlandlord.com. And of course, if you need more artwork for your house, there's always karenbeko.com. So she's got her artwork up there, and then
thank you. Lovely stuff too. Yep.
Every Tuesday. So yeah, all that kind of keeps us busy and jumping. So
good. Jumping back to Karen and her parents, it sounds like her parents are in Victoria. Did she grow up there?
No, she grew up actually in Winnipeg and New Zealand and Calgary. So she was around a little bit, and her parents really liked Victoria. So they actually bought rental property out there, 15 years before they retired, and they had the property waiting for them when they were ready to move out there, which ironically was less than a year after we got married.
Nice. And what part of Victoria are they in? I'm asking this for a couple of reasons. My son, Jacob, is currently selling in Victoria, a real estate agent, just in the last year. And he's talking about like you and I both know Marlborough Park, for example, and a single family home there that might cost $300,000 or $350,000. And he's sending me these examples of similarly sort of located properties in Victoria. Like, they're not Marlborough Park, but they're similar kind of, not the best communities and not really bad. And, selling like $1.3 million. Where did your parents-in-law end up buying in Victoria?
I don't know the exact name of the district, but they're just a little ways from Gonzales Bay, which is a nice little area. There. And, they've got a heritage home. Again, it's not a huge home, but it looks fantastic. They're on the garden tour. So it's a very well-liked little house, and block and a half from the ocean. And yeah, it's going to be one of those expensive houses whenever it comes time to sell.
Wow. So. Neat. Let me ask just a couple more questions. This is a good one for you. What advice would you give your younger self?
One of the things we did is we teamed up with several partners. So we had multiple companies. I think at our peak, we had 4 companies, real estate companies. If I had to do it again, I would do it all on my own. A lot of new investors want partners because they feel it will take a lot of pressure off of them. And if there's mistakes, it'll kind of be covered up because there's 2 of them. Just do it on your own. Maybe have mentors, maybe have people you can talk to, which is huge. But you don't really need those partners when you're starting out as much as you think you need them. And it will make your life a little bit simpler. The other thing, we probably wouldn't have gone as crazy. Like, we were buying and values were going up so much, and we were refinancing and pulling the money out and buying even more. At what level's safe and what level's happy? 20, 25, 30, you just keep on growing and growing. If we would have taken some of that money and just paid down more of those mortgages, we would have been in a much safer, much more equitable position and had, half a dozen properties all paid off, which just changes life for anybody. So those would probably be some of the major lessons I'd mention. And, hanging out with groups, like-minded individuals, so that you're getting that right feedback and you're getting the right information you need to help you grow. Those would be key for me. Excellent
shares, Bill. Thank you so much. So, folks, I guess I just want to, as we're entering another boom market here in Calgary, or what I think was a boom market, probably towards the start of it, and you're investing in Calgary real estate, and you need help with evictions, or actually utilities. We never talked a whole lot about that. I know Bill's in that sharing of utilities. Reach out to Bill. He's got a wealth of experience, and he seems to have a little more time to cool it and talk and share. I think he probably acts as a bit of a therapist to many. Is that true, Bill, in your work? With
talk about
evictions?
Talking people off of the ledge. Yeah. Here's one last fun little tale. I talked to so many landlords that, they go through their first eviction and they've had maybe 2 or 3 tenants. They've had a property for 4 or 5 years. They finally have an eviction. and they say, that's it, we're selling the property, we're out of here. And you've just gone through what's probably the worst, although I've got other worse stories, but you've gone through what's probably the worst situation that happens to the majority of landlords, a bad tenant. Now you understand more of the rules. You will be so much more diligent screening going forward and being more diligent about your property that you're actually probably in a better position to avoid this for the next 5 to 10 years as well. So, suck it up, get back in there, and just be more careful.
I've seen a lot of that as well and give the same advice, whereas it's like, it takes work. Any kind of investing takes work. Your own financial plan takes a little bit of work, I think, to do it well. Not that I have investments in anything other than real estate, but it takes work. And sometimes it mostly goes really well and easy, but sometimes it doesn't. We have to be prepared for that. That's great advice, Bill, for the listener. But if they do insist that they want to sell,
I know a guy.
Bill, thank you so much for being on the show. I think that we should probably have part 2 sometime in the next months, where we focus maybe a little bit more on some realm of the real estate cycle or something like that.
Be awesome. I really enjoyed myself, Brian. It's good to catch up. I mean, we started chatting, it seems like only a couple 100 years ago, but 15, 16, 17 years ago, somewhere in that realm, we first met. We took some training together at one point, and it's just nice to catch up and be able to do stuff like this and share information and help people move forward. So I'm excited about the stuff you've been doing and helping people. So let's just both keep on moving forward.
Keep on moving forward, 100%. Thanks so much, Bill.
All right. Thanks, Brian.